I mean, first and foremost, price is controlled in the futures market. And the big decline in gold and silver futures over the past few weeks was, I think, a realization by the traders that there was, I guess you could say, a sense of people being gullible enough to believe that the Trump administration would halt the upward trajectory of spending, that inflation would be reined in, that the markets would go up eternally because of the Trump trade. And he may be good. And let's just call it what it is. I'm very happy that Trump was elected, and I hope we get a good portion of our culture back. I think people were optimistic. And so the decline in the futures is, I think, the traders started the paper price down, and it started hitting stop after stop after stop as the hedge funds covered, or sold rather. It allowed the commercials to cover. They covered almost 16,000 gold contracts. They covered almost 6,000 silver contracts at 5,000 ounces apiece. It's a lot. So the traders took advantage. They've been getting destroyed over the last several months with the rise in gold and silver. There's still almost 200,000 contracts short on COMEX in gold, and about 33,000 short in silver. So they still have large short positions, and every dollar up in gold and silver, they were getting hammered. They used this as an opportunity to kind of level off their balance sheet. But here again, much like we've seen for the last several years, these corrections are very shallow and they come right back up. And that's because the rest of the world knows we're in a pinch. And they use these opportunities where the paper price is smashed down to buy and to take possession and take delivery of. And I think it speaks to the real demand for gold and silver. And we're not even talking physical in retail. We're talking on a much broader basis. The biggest money in the world understands that. I think that this is a transition period away from things like U.S. treasuries, which again, are getting eviscerated as the 10-year goes higher, which has been weaponized, which has risen by 500 basis points in a year, which is succumbing to inflation. And because of the weaponization and because of this inflation and ultimately, I guess it's a long shot, but you could even say default risk. And what we did with Russian treasuries is default. I mean, call it what you want, call it sanctioning. It's stealing. We defaulted, and we used it to fund the Ukrainian war. And these are things, they're doing the same thing in the European Union. These are very provocative moves. And so the rest of the world is saying, I don't want to hold treasuries anymore, and I'll buy commodities with it. But they're very shrewd in the way that they do it. They don't buy it the way most people think they should. Just buy it all. Well, then the whole thing blows apart. Instead, they're doing it far more methodical, far more diabolical. They're playing the long game, and every time we're stupid enough to knock it down, they're there with dollars that are losing value and treasuries which are rolling off their balance sheet and using the proceeds to buy things like gold and silver, and boom, it comes right back up again. So it's not going to be straight line, but what we see with Trump is something we should be excited about. We should be happy that they're going to address all of the things that they are addressing, but it doesn't change the fact that one way or the other, whether it's orderly, where Trump were to do all of these things, bring back manufacturing, in order to do that, in order to do the things that he's talking about, we don't have a manufacturing base. We don't have the facilities or the machinery. You'd have to build all that. That takes time. You'd have to train people. All of the things that he wants to do to become more of a protectionist country, if you will, America first, well, that could send us into a Great Depression.
The global financial system is under immense pressure, with geopolitical tensions, economic uncertainties, and shifting power dynamics fueling widespread concerns. Andy Schectman provides a compelling narrative that highlights the significance of gold and silver in these tumultuous times. As the world grapples with these challenges, it becomes increasingly clear that precious metals are not just investments, they are lifelines. The economic environment today is defined by heightened inflation, rising interest rates, and massive debt burdens. The U.S., once a beacon of financial stability, now finds itself in a precarious position. The Congressional Budget Office, CBO, has issued dire warnings, projecting that by 2031, 100% of federal tax revenue will be consumed by interest payments on debt and mandatory entitlement programs such as Social Security and Medicare. This leaves little to no room for discretionary spending, including critical areas like defense. Such an alarming scenario underscores the unsustainability of current fiscal policies. Gold and silver have long been regarded as safe haven assets, offering protection against inflation and economic instability. Schectman emphasizes that the current economic landscape is not just a U.S. phenomenon, but a global one. Central banks worldwide are preparing for a seismic shift. Their unprecedented accumulation of gold, repatriation of reserves, and diversification away from the U.S. dollar all point to an impending realignment in the global financial order. One of the primary drivers of this shift is the weaponization of the U.S. dollar. The freezing of Russian treasury holdings during the Ukraine conflict marked a turning point. This action, perceived by many as a de facto default, has eroded trust in the U.S. financial system. Nations that once relied on the dollar as the world's reserve currency are now exploring alternatives. The result? A growing trend of de-dollarization that is reshaping global trade and finance. Central banks, particularly in countries like China, Russia, and India, are leading the charge in diversifying their reserves. Their massive gold purchases are not speculative moves. They are strategic actions aimed at reducing reliance on the U.S. dollar. For these nations, gold represents stability, security, and sovereignty. It is an asset free from counterparty risk, immune to sanctions, and resilient against inflation. The role of gold as a Tier 1 reserve asset, as reclassified by the Bank for International Settlements, thus BIS, in 2019, underscores its importance in the current financial ecosystem. Unlike fiat currencies, which can be printed at will, gold's finite supply makes it a reliable store of value. This characteristic has become increasingly crucial as central banks around the world grapple with the consequences of excessive money printing. Silver, often overshadowed by gold, has its own unique set of attributes. While gold is primarily a monetary metal, silver straddles the line between monetary and industrial uses. Its role in emerging technologies, particularly in renewable energy and electric vehicles, is driving robust demand. At the same time, silver's affordability compared to gold makes it an attractive option for individual investors looking to protect their wealth. Schectman highlights the disconnect between the paper and physical markets for precious metals. Futures markets, dominated by speculative trading, often fail to reflect the real demand for gold and silver. This disconnect creates opportunities for savvy investors. When paper prices are manipulated downward, as they often are, it presents a window for buyers to acquire physical metals at a discount. Central banks and institutional investors are quick to capitalize on such opportunities, further reinforcing the long-term value of these assets. The geopolitical landscape adds another layer of complexity. The ongoing war in Ukraine, coupled with U.S.-China tensions, has created a climate of uncertainty. These conflicts have far-reaching implications for global trade and finance. For instance, China's dominance in critical industries, including renewable energy and technology, has positioned it as a key player in the transition away from U.S.-centric trade systems. As the world navigates this period of profound change, the importance of owning tangible assets cannot be overstated. Gold and silver offer a unique combination of stability, security, and growth potential. They are not just hedges against inflation, they are tools for preserving wealth and ensuring financial stability in an uncertain world.
What the Ukraine has on the Biden family, I mean, it's really insanity to push to that degree. And if it were the other way around, I said this on my own podcast last night, imagine if this was the United States in a war with a South American country or, God forbid, a Mexico. I mean, just suspend your imagination for a moment, and a bordering country. And Russia had provided $200 billion in cash and weapons, had provided strategic intelligence on where to fire and how to fly the F-16s that they gave them, or the MiG jets, and then provided all of the missiles, including long-range, sophisticated missiles that they would need understanding and intelligence on how to use them, how to fire them, how to lock in the coordinates, all of those things. They don't just understand that. They're being fed information, and it's almost a declaration of war. It's insanity. It's complete and total insanity, and you'd like to hope that Putin understands this. But here you get a spokesman for the Kremlin coming out and saying that they've modified their use of nuclear weapons, or their nuclear weapons doctrine, saying that new modifications signify the use of Western non-nuclear rockets by the armed forces of the Ukraine against Russia can prompt a nuclear response. Now, we'd like to hope that that's just rhetoric, but at some point, you have to ask yourself, I mean, is this just the stupidest thing you've ever heard? To contribute to this degree, to be involved in this war that really we shouldn't be involved in, and to continue to fund it to the degree that we are, to provide weapons, to provide F-16s, to provide these missiles and the intelligence and the $200 billion that we've given them with no congressional oversight. Yeah, it is a provocation of war. If it were the other way around, people in this country would be freaking out and screaming, this is a war. It's reckless. And when you think about it, this is the most chaotic geopolitical period in all of our lives, at least probably since World War II. And when you think about, what this truly means, it's insanity. I mean, let's just hope it doesn't provoke something much, much worse. But you have to ask yourself, what the hell are they trying to do? I mean, typically this would be a transition period where the president is wrapping things up, not engaging or escalating a war that is dragged on for far too long and we've been far too involved in, and now bringing it up to this level using sophisticated long-range weapons that could actually outfit a nuclear warhead is the most foolish thing I've ever seen. And then let's not forget that when we talk about the finances of this country, the Congressional Budget Office says even if you get Vivek and Musk to come in and trim all of the fat, that 100% of tax receipts would go just to pay the interest on the debt and mandatory entitlement, which they said they won't touch, like Social Security and Medicare, by 2031. And that doesn't take into account things like defense spending, which are discretional. So we're bankrupting our country. We're inciting a reaction from a nuclear-powered country. I don't know. To me, we should have listened to our founding fathers.
The global geopolitical and economic landscape is shifting at an unprecedented pace, and the implications are staggering. Andy Schectman's analysis paints a vivid picture of the forces at play and their impact on the financial markets, particularly on the enduring value of gold and silver. At the heart of this discussion lies the question: how can individuals safeguard their wealth in the face of growing uncertainty and systemic risks? Schectman emphasizes that gold and silver are more than just commodities. They are shields against the chaos unfolding around us. The world is entering a period of profound transformation, driven by geopolitical tensions, de-dollarization, and the erosion of trust in traditional financial systems. In such a volatile environment, owning physical precious metals is no longer optional. It is essential. The geopolitical climate is one of the most significant drivers of demand for precious metals. Tensions between the United States and China, the ongoing war in Ukraine, and the realignment of global alliances are creating a perfect storm. The U.S.'s decision to freeze Russian treasury holdings during the Ukraine conflict has sent shockwaves through the international community. This action, perceived as a de facto default, has made foreign nations question the reliability of the U.S. financial system. This erosion of trust has led to a growing trend of de-dollarization. Countries like China, Russia, and members of the BRICS bloc are reducing their reliance on the U.S. dollar and increasing their holdings of gold. Central banks are stockpiling gold at record levels, signaling a strategic shift away from fiat currencies. These nations recognize that gold, unlike paper money, is immune to inflation, sanctions, and political manipulation. The weaponization of the dollar has further accelerated this trend. By using the dollar as a tool for sanctions and geopolitical leverage, the U.S. has inadvertently pushed other nations to seek alternatives. Gold, with its universal appeal and lack of counterparty risk, has become the asset of choice. This shift is reshaping the global financial landscape, and its impact on gold and silver prices cannot be overstated. One of the key themes Schectman addresses is the growing disconnect between paper and physical markets for precious metals. Futures markets, dominated by speculative traders, often fail to reflect the true demand for gold and silver. Recent price declines, driven by paper contracts, are a case in point. These dips, however, are quickly met with buying frenzies in the physical market, particularly by central banks and institutional investors. This dynamic underscores the resilience of gold and silver. While paper prices may fluctuate, the underlying demand for physical metals remains robust. Central banks understand the importance of tangible assets in an era of monetary and geopolitical uncertainty. They are not buying gold for speculative purposes, they are buying it to safeguard their national wealth. Schectman highlights the critical role of gold and silver in a world where traditional safe haven assets like U.S. treasuries are losing their appeal. Treasuries, once considered risk-free, are now viewed with skepticism due to inflation, weaponization, and the sheer scale of U.S. debt. In contrast, gold has no counterparty risk and has consistently preserved its value over time. It is the ultimate hedge against systemic collapse. The implications of this shift are profound. As nations reduce their reliance on the dollar and increase their gold holdings, the demand for precious metals is expected to soar. Analysts predict that gold could reach $4,000 to $5,000 per ounce by 2025, while silver, with its dual role as a monetary and industrial metal, could climb to $50 or even $100 per ounce. These projections are not mere speculation. They are grounded in the fundamental dynamics of supply and demand. Silver, often overshadowed by gold, has unique characteristics that make it an attractive investment. Its role in green technologies, including solar panels and electric vehicles, is driving industrial demand. At the same time, its historical use as a monetary metal adds to its appeal. As the global economy transitions to more sustainable energy solutions, silver is poised to benefit from both monetary and industrial trends. Schectman also addresses the psychological and strategic aspects of investing in precious metals. For many, gold and silver are not just financial assets. They are symbols of independence and resilience. Owning physical metals provides a sense of security that no fiat currency or digital asset can offer. It is about taking control of your financial future and reducing your reliance on vulnerable institutions. History offers valuable lessons for today's investors. During the 1970s, a period marked by stagflation, gold prices surged 2,400%, while the US dollar lost 75% of its purchasing power. Silver, too, experienced explosive gains, reaching $50 per ounce in 1980. The parallels between that era and the current economic environment are striking. Rising inflation, geopolitical instability, and declining trust in fiat currencies create a similar backdrop for a new bull market in precious metals. Schectman's insights extend beyond economics and finance. They touch on the broader implications of a world in transition. The decisions we make today will shape the future, not just for ourselves but for generations to come. By investing in gold and silver, individuals can protect their wealth, preserve their purchasing power, and ensure financial stability in an uncertain world. The geopolitical risks Schectman outlines are not hypothetical, they are unfolding in real time. The U.S.'s involvement in foreign conflicts, the weaponization of its financial system, and the growing distrust among global players are creating a precarious environment. In such a scenario, gold and silver are not just safe havens, they are lifelines. The future of gold and silver prices looks exceptionally promising. Analysts project that gold could double its current value in the next few years, while silver, with its higher volatility, could outperform in percentage terms. These predictions are backed by strong fundamentals: increasing central bank demand, rising industrial use, and a global shift away from fiat currencies. In conclusion, Schectman's message is clear. The time to invest in gold and silver is now. The world is changing rapidly, and those who fail to adapt risk being left behind. Precious metals offer a unique combination of stability, security, and growth potential. They are not just assets, they are tools for survival in a turbulent world. For investors, the key takeaway is to view gold and silver not as speculative bets, but as essential components of a diversified portfolio. Whether you are a seasoned investor or new to precious metals, the importance of owning tangible assets cannot be overstated. The world is at a crossroads, and the choices we make today will determine our financial future. By holding gold and silver, you are not just investing in your future, you are safeguarding your present. These timeless assets have weathered countless storms and will continue to do so for generations to come. In a world of mounting uncertainties, they stand as beacons of stability and resilience. The question is not whether you should invest in gold and silver, but whether you can afford not to.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.